Tune in to the Tuesday edition of Tech Stocks Daily, your go-to podcast for all things tech on NASDAQ. Today, we're unpacking Google's groundbreaking privacy settlement, diving into Microsoft's AI-driven future, and assessing Autodesk's dramatic stock journey amid internal investigations. Plus, we'll explore Snowflake's chilling class action lawsuits and spotlight Fortinet's cybersecurity advancements. It's a whirlwind of innovation, legal drama, and market moves that could redefine the tech landscape. Whether you're an investor, a tech enthusiast, or just keeping up with the digital world's fast-paced changes, you're in the right place. Get ready for insights that could shape your view on these tech giants. Today's tech headlines are buzzing with Google's landmark decision to settle a class action lawsuit with far-reaching implications for user privacy and data management. This announcement comes as a pivotal moment for the tech giant, known for its sprawling internet services and powerful search engine. The lawsuit, which initiated in June 2020, highlighted a significant concern among users. Google's tracking and collection of browsing history and web activity data through Chrome, even when users engage the browser's incognito mode for private browsing. At the heart of this debate was Google Chrome's incognito mode, a feature marketed for its ability to allow users to browse the web without saving their activity to their device or Google account. However, the lawsuit alleged that Google continued to collect data on users' private browsing sessions, challenging the very notion of what private browsing entails in the digital age. Beyond user expectations, this case raises critical questions about the boundaries of data collection practices and the transparency obligations of tech companies. In a move to address these concerns, Google agreed to a settlement that not only requires the tech behemoth to delete hundreds of billions of records of private browsing data gleaned from Chrome, but also mandates an overhaul in how it discloses data collection practices to users. Importantly, Google is set to intensify the visibility of privacy disclosures whenever incognito mode is activated, making users more aware of the nature of data collection during these supposedly private sessions. Additionally, part of the settlement includes implementing measures to constrain Google's accumulation of personal information through incognito browsing. This settlement, while not admitting wrongdoing, marks a significant pivot in Google's approach to user privacy. The move is interpreted as a victory for digital privacy advocates, signaling a potential shift in the landscape of internet privacy and data management. It reflects a growing awareness and sensitivity towards consumer expectations of privacy, echoing a broader call for tech companies to adopt more transparent and responsible data practices. Moreover, Google's agreement to delete the collected data that was central to the lawsuit's complaints underscores a broader trend towards enhancing consumer sovereignty over personal data. This development doesn't just impact Google, it sets a precedent that could influence how other tech companies manage and disclose data collection practices moving forward. The ripple effects of this settlement are poised to reverberate across the tech industry, spotlighting the balance between providing personalization and maintaining user privacy. As Google prepares to adhere to the settlement's requirements, the outcome could catalyze a new era of privacy-focused innovations and regulations, reminding us of the evolving challenges in the dynamic interplay between technology, privacy, and user trust. Big moves from Microsoft today that you need to know about. First up, Microsoft is cranking up the innovation dial by testing an Xbox AI chatbot designed to revolutionize customer support experiences. Imagine chatting about your tech issues with an animated character that digs into Xbox's treasure trove of support topics, all through voice or text. This futuristic AI is not just about whimsy and chats, it's powered by generative AI, marking Microsoft's fresh foray into digital assistants post the Cortana era. This Xbox prototype stands as yet another testament to how Microsoft is weaving AI magic across its universe, from aiding game designers at Blizzard Entertainment to combating toxicity in Activision's online realms with ToxMod. Then, there's a financial storyline. Microsoft stock has been in the limelight with a bullish forecast from a Wall Street analyst, projecting a hearty 30% upside, spotlighting Microsoft's AI prowess as a key growth driver. Amidst the financial buzz, there's a regulatory subplot. Microsoft's adjusting its sales in response to regulatory pressures, notably unbundling Teams from Office globally, ahead of aggressive antitrust scrutiny. It's a dance of compliance and strategy, ensuring its hefty investments in AI, including a whopping $13 billion in OpenAI, don't get tangled in red tape. And not forgetting cybersecurity, Varonis has introduced the first cybersecurity solution tailored for Microsoft 365 Copilot, aiming to fortify AI-powered productivity against the dark arts of the digital world. This move underscores the escalating need to shield sensitive data amidst the AI boom. So in a nutshell, Microsoft's making headlines with its AI innovation and gaming support, securing a bullish stamp of approval from analysts, navigating regulatory mazes, and ramping up cybersecurity for the AI-driven future. It's a multifaceted tech saga demonstrating Microsoft's ambitious stride towards an interconnected, AI-enhanced world. Stay tuned for how these stories unfold. Buckle up because we've got a roller coaster update from Autodesk, the giant in software for computer-aided design. Two big news stories have Autodesk in the spotlight today, illustrating a fascinating tale of triumph and turbulence. First up, let's talk success. Over the last 10 years, holding Autodesk stock would have been akin to finding a golden ticket. The company smashed market expectations with its performances, yielding an annualized return of 18.09%. To put it in perspective, if you invested $1,000 in Autodesk a decade ago, today that investment would have ballooned to a whopping $5,338.27. This stellar growth catapults Autodesk's market capitalization to a hefty $53.20 billion. The magic word here: compounded returns. This story underlines the power of long-term investment and how it can turn your financial aspirations into reality. But not everything is smooth in the world of Autodesk. In a turn of events, the company's stock took a hit following the announcement of an internal investigation into its accounting practices. The issue at hand involves concerns around free cash flow and non-GAAP operating margin practices. This revelation prompted Autodesk to delay the release of its annual financial report, although they aimed to file within the 15-day extension period allowed. Despite the setback, Autodesk remains optimistic that the findings won't necessitate revisions to previously issued financial statements or impact the recent earnings announcement. The company has rallied its forces, bringing on outside counsel and advisors to navigate this storm. Meanwhile, its last quarterly report boasted an adjusted 29 cents a share, marking a commendable 12% year-over-year rise, with sales up by 11%. The convergence of these stories paints a multidimensional picture of Autodesk. On one hand, we witness the fruits of strategic investment and innovation. On the other, a reminder of the complexities and challenges inherent in managing a tech behemoth. For investors and tech aficionados alike, Autodesk's journey serves as a compelling study in resilience and the dynamic nature of the tech industry. Stay tuned as this story unfolds. All right, folks, strap in for a frosty tale straight out of the data cloud. Snowflake Inc., the NYSE-traded powerhouse known for its cloud data platform, has hit a bit of turbulence, making it today's hot topic on the tech news front. The spotlight is on a duo of investor alerts from legal bigwigs Kirby McInerney LLP and Bronstein, Gewurz & Grossman LLC, both announcing class action lawsuits breathing down Snowflake's digital neck. Here's the scoop. The drama traces back to Snowflake's initial public offering period and a bit beyond, between September 16, 2020 and March 2, 2022. During these groove-filled months, Snowflake was painting the town red, boasting about triple-digit growth rates in product revenue and remaining performance obligations, even whispering sweet nothings of a bright future ahead. The company's shares were up, soaring high, all the way to over $400 a pop. But then, as with all tales of hubris, came the fall. March 2022 rolled in with a reality check. Snowflake, amid a spring thaw, revealed far lower growth projections for fiscal 2023. Think 65% to 67%, a steep dive from those sunny triple-digit forecasts. This bombshell revelation caused their share price to plummet by about 15.4% in just one day. Both lawsuits allege a cocktail of misdeeds, from systematically overselling capacity to clients, throwing around unsustainable pre-IPO discounts like confetti, to setting up a stage where unused customer credits would end up cannibalizing future sales. In essence, these actions painted a far rosier picture of Snowflake's position than reality warranted, leaving investors out in the cold when the truth eventually surfaced. So, if you've got a stake in Snowflake or just love a good tech saga, keep your eye on these lawsuits. With April 29, 2024, marked as the deadline for lead plaintiff motions, this legal blizzard is just getting started. Stay tuned as we watch how Snowflake weathers this storm and whether they can snowball back to their peak or if they're destined for a meltdown. Today, Fortinet made headlines with two significant announcements, both spotlighting the company's relentless innovation and leadership in cybersecurity. First up, Fortinet unveiled expansive upgrades to FortiOS, its powerhouse real-time network security operating system, now in its 7.6 version. This update is all about empowering enterprises with advanced capabilities to fortify their networks against evolving threats. The enhanced FortiOS strengthens the Fortinet security fabric with new features that simplify management and heighten security across content, applications, devices, and more, all while boosting performance and efficiency through Fortinet's custom ASICs. In addition to the tech upgrades, Fortinet also shared plans for its first quarter 2024 financial results conference call, scheduled for May 2nd. This ahead-of-the-games move aims to keep investors and the industry at large in the loop about Fortinet's financial health and strategic outlook. Fortinet's announcements today demonstrate not just its commitment to advancing cybersecurity technology, but also to maintaining transparent and ongoing communication with its stakeholders. Now, I'm really curious to hear what you think about Fortinet's latest moves. Are these updates game changers for enterprise security? How do you see Fortinet's financial prospects shaping up in Q1 2024? Drop your thoughts, analyses, or even your predictions in the comments below. Let's get the dialogue going. Today, the overall market sentiment displays a complex but cautiously optimistic landscape, markedly shaped by significant industry movements and technological advancements, primarily driven by leading NASDAQ-traded tech companies. Market reactions were a blend of enthusiastic responses to tech innovation and strategic shifts, tempered by regulatory and legal challenges faced by these giants. On the one hand, Google's landmark settlement underscores a growing market sensitivity to privacy and data management practices, potentially reshaping user trust and setting new precedents for tech industry regulation. This move by Google reflects a broader tech industry trend toward prioritizing consumer privacy rights and could signal a shift towards more transparent data practices industry-wide. The settlement, focused on overhauling privacy disclosures and data management, instills a cautiously optimistic sentiment among privacy advocates and consumers, suggesting a more privacy-conscious digital environment moving forward. Microsoft's narrative today paints a picture of aggressive expansion and innovation, particularly through its strides in AI technology. The anticipation surrounding Microsoft's Xbox AI chatbot and its broader AI initiatives, including heavy investments like the $13 billion injection into OpenAI, generates a buoyant sentiment regarding the company's growth and the tech industry's innovative potential. This is further buoyed by bullish forecasts from Wall Street analysts, suggesting strong investor confidence in Microsoft's strategic direction, especially in AI. However, this optimism is balanced with a careful watchfulness over regulatory responses to Microsoft's market maneuvers, indicating a nuanced market sentiment that values innovation but remains wary of potential regulatory hurdles. Autodesk's mixed financial narrative, with remarkable long-term stock performance contrasted by recent turbulence due to internal accounting investigations, exemplifies the tech sector's volatility and the intricate challenges of sustaining growth while maintaining regulatory compliance and transparent financial practices. The company's resilience in addressing these challenges and its history of strong performance does lend a cautiously optimistic outlook, underscoring the potential for recovery and long-term success despite immediate hurdles. Snowflake's situation illustrates the potential vulnerabilities of tech companies to legal and market fluctuations, with class action lawsuits highlighting significant disconnects between pre-IPO promises and post-IPO realities. The legal scrutiny serves as a cold reminder of the consequences of overly aggressive growth strategies, casting a shadow of caution over market sentiment towards Snowflake and other tech companies with similar growth trajectories. Fortinet's announcement, emphasizing cybersecurity advancements and financial transparency, contributes positively to the market sentiment, highlighting the critical importance of security in the tech ecosystem and the company's commitment to innovation and stakeholder communication. Overall, today's tech market sentiment is cautiously optimistic, driven by faith in technological innovation and strategic expansion, albeit underpinned by a heightened awareness of the regulatory, legal, and ethical complexities that these industry leaders navigate. All right, diving into the thick of things today, let's zero in on Snowflake Inc. If I were weighing my options on whether to buy, sell, or hold following today's news, I'd be leaning towards a cautious hold. Here's the lowdown on why. Snowflake has found itself in a chilly squall with the investor alerts about class action lawsuits concerning its performance projections and sales practices during and shortly after its IPO phase. The legal spotlight on the alleged overselling of capacity and unsustainable pre-IPO discounts does cast a shadow of concern. For investors, this points to potential volatility in Snowflake's shares as the company navigates these legal blizzards. The revelation of far lower growth projections for fiscal 2023 than previously hinted dropped their share price significantly, indicating that initial overly optimistic forecasts could impact investor confidence and share value in the short term. However, holding might be the wise choice for a couple of reasons. First, Snowflake operates in the burgeoning cloud data sector, offering a cloud-based data storage and analytics service that's in increasing demand as businesses continue to digitize their operations. This underlying business model still has significant growth potential, particularly as the use of big data and AI technologies continue to expand. Secondly, legal disputes and the kind of issues flagged in investor lawsuits are unfortunately not uncommon for fast-growing tech companies. These types of challenges can sometimes lead to improved practices and better clarity in financial reporting and business operations, potentially strengthening the company's long-term outlook. The main takeaway here? If you're already invested in Snowflake, holding might offer a chance to see how the company addresses these legal challenges and if it can stabilize its growth projections and market position. On the flip side, this situation also underscores the importance of diversification. Not having all your investment eggs in one basket can help weather this kind of storm. Remember, investing is as much about managing risks as it is about chasing returns. Keep tuned for more updates and keep those investment decisions informed. In wrapping up today's action-packed day in the tech market, we've seen everything from significant legal settlements affecting user privacy and data management to innovations in AI promising to reshape the landscape of customer support and cybersecurity. It's been a day of contrasts, with triumphs in technological advancements shadowed by financial scrutiny and legal challenges. The narrative threading through today captures a tech ecosystem at the nexus of innovation, regulation, and investor vigilance. Navigating this intricate dance will undoubtedly shape the paths of the companies discussed, influencing market sentiment and future investments. If you found today's summary insightful, remember to like, subscribe, and share this video with others in the tech community. Your support helps us keep the conversation going. And for your daily dose of tech insights and news, be sure to return tomorrow. We've got more stories, more developments, and of course, more tech news to dive into.